Welcome back. You're still tuned into Halftime Report on CNBC TV 80. Nifty is absolutely flat, as I earlier pointed out, 80 points off the highs of the day. And it's the IT pack which is doing well in trade. That's the top gainer as far as sectoral moves are concerned, followed by Nifty Auto. A lot of auto earnings which are in focus. Maruti is something which is expected to report numbers today, so that index is doing well. On the flip side, we are seeing this big decline coming in Nifty Realty. So that is the top loser, down 1.5%. And the PSU banking index too is down 1% in trade today. But let's move on and talk about one more corporate that is on our radar today. Syngene International reported a mixed set of Q3 numbers. Revenue is up 23%. It has missed Axis estimates of around 27%, but the company has reported over 20% growth for the second consecutive quarter. Jonathan Hunt, who is the CEO and MD at Syngene, is joining us now to discuss the earnings and the outlook going forward as well. Jonathan, good afternoon. Thank you so much for joining us. Well, it's been the second consecutive quarter of 20% growth for the company. For this time around, this 23%. Can you detail to us which are the segments that did well for you? What is the growth in all of your verticals? And is this something that you'll continue to report in coming quarters as well?
Yeah, I'm pretty happy with the results, actually. We started at the beginning of the year. We got quite a strong first quarter. That prompted us to upgrade our outlook for the year. Second quarter was solid. Third quarter's continued that trend at 23% revenue growth. So we're pretty optimistic. Sets us up for a busy fourth quarter and on track for our upgraded guidance for the year. The balance across the different divisions, so we have a discovery services division, we have dedicated centers, development and manufacturing. It's nicely balanced across all four of those. And we're seeing good demand in the major markets for us. That's the US, North America, and Europe. And they're showing pretty good sort of acceleration in demand coming out of the pandemic. So pretty happy in terms of the demand environment, certainly very happy about our own performance in the quarter, and it puts us on track for a good year overall, albeit a very busy fourth quarter.
Can you give us some indication of what you mean by a good year, especially in the CDMO segment, which is the contract drug manufacturing segment? The revenues have been quite lumpy. Can you tell us what was the growth in this quarter there and what is the kind of sustainable growth you see in the full year?
Well, I can comment around it. We don't actually break out segmental reporting, so I'm not about to break down the P&L. But that's the nature of the work. I mean, manufacturing projects tend to be long cycle, and you can see differences quarter over quarter. I think the key thing for us in the manufacturing area was actually the regulatory inspections we had in the quarter. As you know, we've been investing for the last few years in building a new manufacturing business in biologics. One of the key gateways you've got to do there is pass regulatory inspection. And we had not one or two, but three regulators inspecting us in this last quarter. That was the US FDA, the European Union, EMEA, and also the UK MHRA. All three left with a very positive, I think, perspective on our operations, and all three regulatory hurdles were cleared. So that's a key enabler for the year we're about to go into. We had to pass those inspections to be able to take that business forward. So we're pretty happy with that.
Right. Jonathan, if you could simplify your revenue growth for us, 23% growth in the third quarter. How much of that has been on account of the depreciating currency? How much of that was organic, constant currency growth? And on the guidance itself, how much of Librela is factored into the high teens guidance for FY23?
Yeah, good. Well, let me deal with the second question first. Not a lot. I mean, Librela is really an issue for the next financial year and beyond. It's a 10-year strategic partnership, so we're really going to operationalize that in FY24. The enabling of that was in this year, and particularly the regulatory bits, but it's not driving this year's revenue to any great extent. On the currency, we've got a tailwind because of the way the business operates on currency. Just about all of our contracts, all of our business dealings at the revenue line are done in US dollars, and then we repatriate into rupees. So that structural depreciation that you see of the rupee to the US dollar is a constant sort of benefit for us. In a normal year, we'd expect 3-4%. In the last quarter, year over year, we had about a 9% boost. So there's probably about a 4 or 5% on top of what we would have normally expected.
Okay.
But yeah, it's a real tailwind for us.
Oh, it is. So on that Librela, I had a follow-up question. Once it actually commences in terms of production, what are the peak revenues which you are expecting from this product? And at what stage of production is it currently?
Okay, so we're in the qualification period. We're starting to work through that. That was why the regulatory inspections are important. The deal overall is a $500 million US 10-year contract. As for what the sort of demand will be in any given year, that's something that really will be determined by our client rather than us. But it gives you a general sense of it. It's just strategically important and a big opportunity from a Syngene perspective.
Okay, that's a big opportunity. You've recently expanded your manufacturing agreements with many companies, with the animal health companies, Zoetis, with BMS, Amgen. Are there any more expansions that are likely in the near future?
I hope so, and I'll happily report about them when they've happened. But as I said, it's a good demand environment at the moment across discovery services into development and manufacturing.
Virtually at the end of this financial year, and you are obviously on target to meet your upgraded guidance of high teen sort of growth on your top line. But next year, you do have a lot of tailwinds coming in from the Librela deal, the Zoetis deal, etc., which my colleagues just spoke of. So do you have any sense, any indication, or any expectation of how FY24 is likely to be for you?
Yeah, I think we've got some positive momentum in the business. I'd expect to continue that into next year. So an outlook that looks, at least as good as this year, maybe better.
So at least high teen sort of growth, at least 19% growth, and more if some more deals like you promised would come by.
I would have thought so, but we'll calibrate that at the full year results.
Okay, all right. Thanks a lot for joining in and all the best. That's the word coming in from Syngene. Now it's time for the CNBC TV 18 budget quiz. Remember, there are prizes to be won every day. We give you the question at 9:14 today. But in case you missed it, here's today's question. What was the projected nominal GDP growth for FY23 in the last budget? Your options are A, 10.9, B, 11.1, C, 11.9, and D, 12.1%. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC TV 18 News. Use the hashtag budget with CNBC TV 18. Now hurry and send us your answers. Remember, we'll announce the winner at 3 p.m. today.